There's a question coming in from Iqbal Khan. Thanks Iqbal for logging in onto our live here on the MoneyMile on Facebook. He asks, which is more secure, property investment or share/bonds? I would go for rental income in property is what Iqbal is saying. Well, Iqbal, I did speak to a very noted real estate expert, Anuj Puri. In fact, we've done a series of videos with him as well, which you can catch on our Facebook page. In fact, Surya, he was mentioning that in key markets, the rental yields are right now 1.5% to 2%.
I totally agree with Anuj on the same, because that's the same thing we are seeing in today's market. The rental yields, especially on the residential properties, yes. I think that's what he's mentioning, is on an average of 1.5%. And on that is taxable. Plus, you have that risk of property not being rented out, gets vacated, you have a challenge of handling the tenant. So, you maintain that property. So, there are too many of, I think, caveats attached to this. So, for the 1.5% of earnings taxable, and when I'm not sure that what is the growth of my capital on my investment, I'm not too sure whether that's the asset class you want to look at. In the early days, and I'm not going back few decades, I'm saying few years back, you found the properties were escalating in the valuation. So you were getting a 10-20% return in the real estate markets. And that's when these returns were just giving you little fillers where you could get some return on your income and you were very happy about it. Your asset was growing at 10-15% compounding. Some people were even leveraging themselves very high, paying 20-30%, and you were selling at a total sale value, making an astounding return. Those days are gone. I think now you're staring at actual realities. Valuations have gone down. Rentals were always 1.5-2%, but they were never into 4. They were never taken in with serious effect because that was not the big game. Now, as you also mentioned, the big game is my rental, because you can't see a growth. So if you say rental income, residential, today's time, I think there are better opportunities than that.